Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
Big day today, Fed day, or was it a big day?
It was a big day.
It was.
Very meaningful. We heard from Powell. There is a reasonable amount of uncertainty in the marketplace around a whole host of issues, ranging from geopolitical issues to tariff and eventual inflation impact issues, uncertainties about, the labor market, how's that doing with the current, in the context of the current immigration policy, and yeah, there's uncertainty around the fiscal situation. Are we going to pass, this really large spending bill? Is it going to be more tame? And so there's a lot of moving pieces, and Powell seems to think that, given this level of uncertainty, given the fact that most folks are anticipating inflation to move higher through the course of the year as a function of the tariffs, he thinks that policy is adequate at the moment.
So no cut, no hike.
No cut, no hike.
An uncertain, thoughtful pause.
An uncertain, thoughtful pause, yes. But we did receive the summary of economic projections today, and it was the back-to-back summary of economic projections that basically hinted at stagflation worries, right? They lowered growth from 1.718 to 1.4 for GDP growth in 2025, but they increased their core PCE estimates up to 3%. And they also increased their unemployment forecast from 4.4 to 4.5.
So unemployment higher in their mind, inflation higher, growth down.
Down, which
is stagflation.
Is stagflationary.
Yeah.
And the question is, what are you meant to do in that environment, right? Like, if you lower interest rates because you're concerned for growth, inflation expectations will probably move higher. And so you're stuck between a weird situation where you just kind of need to see what happens to kind of actually determine
to break
what
one way or another.
Correct. However, what was interesting though is in that, given those set of expectations, the dot plot still had 2 cuts on average for 2025. And I believe the cuts for 2026 decreased by 1 cut. So high level, I think Powell summed it up really well when he said that none of the board members had material confidence in their dot plot estimates.
So even though the dot plot exists as it does, no one's that firm on it.
No one's
the whole
that
thing
firm.
could change.
The whole thing could change.
Yeah. So nothing ever happens for now.
Potentially. But realistically, it's okay, yeah, the economy's chugging along just fine. Why do you want to cut rates that aggressively? Now, the other interesting wrinkle that's very different than historical kind of Fed policy, and especially in the context of the executive branch, is you're getting a ton of pressure from Trump to cut.
Yeah.
Right. He talked about 200 basis points of cuts today. Right. Not just 100 bips.
Wow.
And to be honest, I get it from I want fiscal sustainability and I want to be able to raise a ton of long-term debt after rates have moved lower. And arithmetically, that does make sense.
Yeah.
But in terms of the consequences of that and the unintended consequences of cutting too soon and too aggressively could be catastrophic.
Right.
Potentially. Right. In terms of unanchored inflation expectations.
Right.
And then having to reverse course super quickly and losing credibility at the Fed. And so, again, stuck between a rock and a hard place with a ton of unknowns.
All right. So, we've been unknown for a while, too. You've been covering this quite well because this is what you've been saying now for several weeks about this, right? Unemployment, sketchy. Growth, sketchy. Markets are still, I guess, are down a little bit now with the crisis happening in the Middle East.
We are 1 day away from all-time highs.
Yeah,
one good day
in
in the equity market, and you are at all-time highs. Forward valuations or estimates, essentially forward PEs are back to the highs.
Yeah,
right. You're talking about a 22 forward PE on the S&P. That's where we were in January, right? And so there is a lot of optimism priced into the market. a lot of that optimism has been driven by AI and the continued like growth in terms of expectations, in terms of like the net impact on companies. Like Oracle reported really strong earnings last week. That's been a name that's been doing well. Microsoft obviously has been doing fantastic. And there are other pockets like AI healthcare related names, and things like that. But long story short, like people want to invest in the AI theme, and that is
Buoying.
buoying the market to a material degree.
Yeah.
And if you think about the geopolitical stuff, a resolution of the geopolitical stuff is incredibly bullish.
If it does happen.
Whether it's we've destroyed all of Iran's nuclear capabilities, so they no longer have them. That's a positive, ultimately.
Yeah.
Question is, will that lead to more unrest in the region, higher oil prices, blah blah blah? But I think generally it'll be like a pretty good outcome,
at least for the near to medium term following such an outcome. I would agree with that.
right? And so you've got
or if it's a negotiated settlement that halts the conflict. Would also
Correct.
You were going to say, but either, right? I mean,
either.
Yeah, either resolution.
Either form of resolution, I think, is like,
because right now they have us kind of on pins and needles here. You got the Ayatollah saying a surprise for the ages. Get headline after headline about Trump, like either getting involved or doing more.
No, but I think you're the main chunk of the distribution of outcomes with respect to this conflict is generally positive. Now, that doesn't necessarily mean that the left tail associated with this geopolitical risk isn't necessarily like that big. Right. I think people are underpricing that kind of left tail outcome where this becomes more prolonged,
spirals,
and like that's a real risk. But the bulk of the distribution, I think, is generally positive for markets. And so, with that in mind, like crypto, has retraced from the highs. Bitcoin's off 5% from where it was, call it late last week.
Yeah.
And you've seen a material decline in alts.
Yep.
But there are some very strong pockets of strength. And some of it is associated with optimism around the Genius Bill, and kind of optimism about, where DeFi is headed and stablecoins are headed. And, those are the parts of the market that I think are most relevant to investors. And you see that in like DeFi names, and they strongly outperformed like your L1s and BTC to a certain extent over the past month. And I think that if you're going to a world where tokenized equities are a thing, where DeFi platforms have a clear pathway to engaging with users, there's an institutional pathway for DeFi protocols, there is more active usage of stablecoins, and therefore stablecoin dexes and things like that. You're talking about DeFi TVL that's probably going to move up in huge orders of magnitude.
Yeah.
And if that's the case, that's truly the bull case for a lot of DeFi.
It's interesting. Yeah, I agree. And also, even with the outside of that pocket of strength that you're talking about, like, it still feels pretty resilient up here. I think.
Yeah.
Remember there was a time last year when Iran sent a wave of drones at Israel on a Saturday night, and Bitcoin tanked from like mid 60s to like 48. I think the rest of the market opened flat on like nothing ever happens capital on Monday morning. But it's some weakness in general, but not. I mean,
not a whole lot.
Feels like if this resolves, we can resume our prior trend activities.
Yeah, no, absolutely. And I gotta say that there's tremendous capital flowing into treasury companies right now, and a lot of interest in treasury company plays, and that's genuine buy pressure.
Yeah.
And so there's never been a stronger link between traditional capital markets and BTC,
right?
And the rest of crypto, to be honest with you. And so, as more capital is formed, like more capital finds its way into crypto, and that makes me incredibly bullish over the long run.
Beimnet Abebe from Galaxy Trading, as always, thank you so much.
Thanks for having me.